So you're about to find out why having Pamp Suisse gold bars is going to have a huge impact on your savings and your money. But before we get into that, understand it's not too late to buy gold and silver. Yes, we are at all-time highs and keep hitting all-time highs, but things are just starting to warm up, and I could see gold reaching $10,000 much quicker than a lot of people think. More on this in just a second. Now, I personally hold everything from 10-ounce Pamp Suisse gold bars to a whole bunch of 1-ounce Pamp Suisse gold bars. I have the most in this packaging right here, this one, this model right here. And then here's one not in the casing. I have a ton of these things. They're awesome. So if you aren't adding these to your portfolio, you're about to miss out on what I think is going to be the largest return on gold and silver we have ever seen. And this isn't like based off of a feeling I'm getting, all right? My wife tells me I'm horrible at feelings anyway, so if I went all feelings, it probably wouldn't work out too well for me. I'm going to go all facts and history. Extremely important. I'm going to give you hard proof from multiple angles how these right here are about to explode. So let's start with a very brief history of money and precious metals. So this part is super important to understand, and it can have a significant impact on your wealth. And look, I know I joke around a lot on here, but I'm being dead serious. This is very important. We could be talking about the difference between losing like 80% of your savings or possibly 5 to 10xing your investments or more. So just be patient with me. So to start, precious metals were first used as money in 7th century BC. They were used before that, like as far back as, the Egyptian times, but the use for actual money started in 7th century BC in Lydia. Now, it progressed to ancient Greece, Persia, the Roman Empire, China, and eventually it spread globally. And you see, most people just don't understand, why are precious metals so valuable? And of course, they have practical uses, right? And I think most people understand that. They're practical uses. They're used for things like electronics and solar panels and dentistry and water purification, photography, medicine, like tons of other stuff. But that's not really the main thing that makes precious metals so valuable. It helps, of course, but it's not the main thing. And the main thing that makes them so valuable is the stabilization that it provides for monetary system. Since precious metals were introduced as money way back in Lydia, there's been a consistent trend in history. When empires stick to metals as a 100% form of their money, they prosper, right? The economy does awesome. There's no problems. And if you don't believe me, this is well documented in history. You can just look it up. But then it happens. Good old human beings step in and mess everything up like we always do because we suck. No, for real though, what happens is the empire that has this precious metals backing it and working well, all of a sudden they start growing. So a growing empire means growing militaries and growing social programs, and all this is really expensive. Of course, eventually they get powerful and other countries get powerful and war happens and they got to fund the military. And that's the most expensive part. Then we do that human being thing, I guess you could say, and we start debasing the currency because at that time we don't have enough real money to fund all of these new expenses like the social programs and especially the war. So we start creating partly fake money into eventually totally fake money known as fiat currency. If you're not following me, let me give you a couple of specific examples. So what starts as like 100% gold coin eventually becomes 50% gold with worthless metals mixed in. Eventually that coin gets turned to 25% gold with worthless metals mixed in. Expenses keep piling up. It goes down to 10% gold until eventually, I'm sure you can guess what happens. It's totally worthless metals making up the money that was once pure gold and silver. Of course, this means eventually it's totally fake money, and that's a huge problem. That is because there is then no real value behind the currency being created besides confidence, right? Especially since they can just print off as much as they want whenever this happens. Now, back then, the proper term would have been coining for the coins. We now say printing because of the production of the dollar bills. And all of that money printing leads to inflation and eventually hyperinflation. This causes people to lose faith in the currency. Remember, a fiat currency, the whole value behind it is faith, right? The value is based on faith. When people start losing faith, it starts losing its value. And this is what leads to the collapse of the empire and a rush back into gold or silver or real money. Now, it's important to understand why precious metals work so well as real money better than anything else to totally grasp this. Remember, this has a huge impact on the amount of money in your savings and your wealth. So you have to understand this. So here's the reasons. Number one is scarcity, okay? Precious metals are rare and they can't be easily replicated or produced. Number two is durability. They can withstand wear and tear and over time hold up very well. Number three, divisibility. They can be divided into smaller values without losing their value, which is needed for making different size purchases. Number four, portability. Relative to their value, they're easy to transport and store, making them convenient for trade. Five is intrinsic value. Now, we talked about this a little bit earlier, but they have many practical uses like electronics and solar panels and everything else. Number six, acceptability. They've been historically accepted and have worked as money and a medium of exchange. Okay, they're tried and tested. Number seven, uniformity. Each unit of precious metals is the same unit as every other unit, making it simple to verify and measure. So number eight, security. Precious metals are difficult to counterfeit, adding a layer of security and trust. Now, these unique properties together is what makes precious metals so valuable. There is nothing on the entire earth that we found that can do the above things better than gold and silver. You name something in the comments you think is better, and I'll list all the reasons it's not. And this, what we just talked about, are the things that make precious metals so valuable. Unique properties we just listed make them the best fit for using for real money. And considering where our current global economy is, a global fiat currency economy, this is exactly why precious metals are about to explode, just like they have in history. Precious metals are the equalizer. This has happened many times before, and that's why we're talking about history. Precious metals prices explode during these times. It's like a reset, right? So let's dig deeper to make sure you have a full understanding of how important this is. If you're going to invest, you have to understand it, and you have to understand it with confidence. So we abandoned the gold standard, or the need to have precious metals backing our currency back in 1971. Now, before then, newsflash, all of our nickels and dimes and quarters had real silver in them. 100% silver at one time, down to 40% silver by the late 1960s, and by 1970, they were replaced by a copper-nickel clad composition. The exact same thing that happened before in all the empires before us, all of which failed after going to a fiat currency. And can you guess what has happened since 1971? This is what happened. Our debt went from virtually nothing to now being over $34 trillion. And look how quickly it rose. It just keeps going up faster and faster and faster. We accumulated $8 trillion of debt in the last 4 years alone. That's almost a quarter of our national debt of the last 200 plus years made in just 4 years. And it keeps going up faster. This is called unsustainable. Actually, the proper name for it might be a total storm. The greedy use of fiat currency for the last 50 years is at its tipping point. And there's no fixing this. Now, we have other videos going much deeper into this, but I have more to cover, so I don't want to get, any deeper on this specific aspect of history. Make sure you subscribe to get that further education on the history. And I'll tell you what, if I was like an alien or someone outside of this that was like watching a movie on the history of human beings on Earth, I'd be thinking, you dummies. You keep repeating the same mistake over and over and over. And hell, you don't even have to go too far back in history to get specific warnings. Some of our smartest founding fathers, like George Washington, Thomas Jefferson, they warned us, and it's all documented. They warned us against going to a fiat currency. There's many documented quotes from them and others of our founding fathers saying, stay away, right? Because they experienced the aftermath of the Revolutionary War, where large amounts of currency were printed to fund the war, as it always happens. They experienced firsthand what this did to the country. They experienced the effects of hyperinflation. They experienced the rebellions, the rioting, the chaos. But did we listen? Nope. Idiots. So that's the number one reason to start investing in these, like right now. There's links in the descriptions for dealers I use below if you're interested. If not, just carefully research who you're going to invest with. And let's go over some of the other reasons you should be buying these right now. Maybe the history thing isn't enough for you, right? Not sure how, history wouldn't be, but that's okay. And we'll go further into this because we could forget all of what I just talked about and just go off the following information. And you would know that what you're doing and investing in gold or, Pamp Suisse Gold Bar specifically for the sake of this video is going to make a huge difference in your wealth. So point one was history based, right? These points are more economic based. So there's three major sectors that hold up our economy, right? You got the real estate market, you got the stock market, and then you got the bond market. And typically, when one of these sectors isn't doing good, just one of them, well, precious metals do very well. Let me spoil things for you. All three major sectors of the economy are in some trouble. Let's start with real estate. Now, obviously, the prices of things go up over time as more currency enters the economy. You know about inflation. We don't have to go there. If we divide the asset price by the amount of currency growth, it gives you the real value of something over time. That is the real home price index. The home prices adjusted for inflation should really be like close to 100, right? Notice where things were in about 2008, about the 190 range, right? Of course, we crashed with the 2008 financial crisis because of this number being so high, and then we went down to about 130. But we never fully reset. We are technically still in a continuation from 2008. And now, well, we are worse than we were in 2008. We are currently in the worst real estate bubble in history. And that's not the only chart that I can show you for this. Here's a chart on the home price to median household income ratio. Put this simply, this measures affordability, okay? People used to pay a little over 4 years of their income to buy a house from 1970 to 2000. Now, when the 2008 bubble popped, they were paying about 6 and a third years of their income or so, right? Then, of course, we crashed because, as with the other chart, this is way too high. Well, guess what people are now paying? They're now paying almost 7.5 years their income to buy a house. This is outrageous. And by the way, this is all just measuring residential real estate. Commercial real estate is in serious trouble as well. The 2008 crash was bad, and it was essentially put in motion due to the problems in residential real estate alone. Now the residential is worse and commercial is involved, and we haven't even talked about the bond and stock market yet. Keep in mind, gold more than 2x'd from 2007 to 2011 during these times, and that was based off the problems in the residential real estate sector alone. This one is going to be worse. And again, we haven't even talked about the bond and the stock market yet. Maybe starting to see why buying Pamp Suisse gold bars or really any brand of gold, as long as it's real, is important right now. I really hope so. And before I cover the bond and stock market, understand this. I'm not necessarily some precious metals advocate. I'm an advocate of investing in the right thing at the right time, and it's precious metals time right now. You could argue crypto too, but we're talking about precious metals for now. Markets go through cycles, and it's just precious metals time right now. If you don't understand this, you're likely going to lose a lot of money. Investing is actually very simple if you're able to take out the emotion, the fear, the excitement, the greed. You eliminate those and investing can be somewhat simple. So let me show you what I mean. Let's take a look at the stock market. Now, your typical financial advisor is going to tell you that you just keep putting money into stocks, right? Just keep putting money into the markets because they always go up over time. And in a way, that's true if you look at the big picture, okay? But people think stocks are like this magic bullet that is safe and it's always going to be a good return on investment. No, that is not true. Just look from the year 2000 to the year 2013. Stocks gained no value in 13 years. So, if you invested in a bunch of stocks in 2000, by 2013, they would have been worth the same thing as they were in 2013 years earlier. And you factor in inflation, and you lost your ass. Gold, on the other hand, whooped the stock market's ass from 2000 to 2013. Same in the 1970s. The stock market did virtually nothing throughout the 70s compared to gold. And look, it's been the same for the opposite for the last 10 to 15 years. Stocks have done extremely well, gold didn't. It's a cycle, okay? And we're going back now. Stocks are coming to their end. We're transitioning into gold. People are realizing that fiat currency is falling, and there's starting to be a transition into precious metals and into cryptocurrency. So let me show you a chart of what gold did during the 1970s. This one's awesome. The gold price was about $36 in 1970 and went to $615 in 1980. It actually went a little higher, I believe, but that was probably the end of the 1980s. It actually went a little higher, I believe, but that was probably the end of 1980 they're tracking. So that alone right there is a 17x investment in 10 years. Again, these are essentially market cycles. And let's go back and look at the stock market again, this time focusing over the last 10 to 15 years or so. And I just kind of talked about this. What do you see, right? You see a massive run over the last 10 to 15 years. And again, yes, stocks were a fantastic investment during this time. But there's a couple things to understand with this. First is that this bull run was artificially inflated by all the money printing done over the last 10 to 15 years. Over 70% of our nation's debt came for the last 10 to 15 years of money printing. You'd be blind to not see that this is what artificially inflated the stock market. And look, here's the thing with investing, okay? 90% of people invest at the top or near the peak of a bull run. Why is this? Why does this happen? Well, because after years of seeing good news about a certain sector, they get comfortable with it. They get sold the notion that it's just going to keep going up and up and up. So they put their money in when things are just way up and looking green and good, and that's when it happens. That is when the bottom falls out. And the same thing happened with Bitcoin, right? When it got into the 50,000s and then into the low 60,000s, everyone thought it was going to keep going up and up back in 2020, 2021, when that was smart money left, dumb money entered. Guys, we are at the top or very close to the top when it comes to the stock market. Everyone knows it's artificially inflated. Don't be a victim to this phenomenon, right? Roll that money out of your 401k into precious metals, or at least a portion of it, and then you can always roll it back when the stock markets turn again. So let's quickly just finish with the bond market, okay? Obviously, bonds went on an epic run, right? The bond or the debt market just went on an absolute tear, okay? But that part is over. The 30-year bond market, last time I checked, was down like over 50%, right? And the current collapse in treasury bonds now ranks among the worst crashes in history. And bonds, or debt is the heart of our economy. Our economy runs off debt. And look, this video is already pretty long, so I'm not going to go into the bond market a ton because it could be hours on its own, but I'll shoot videos specifically on the bond market and explain, how our economy runs off debt in other videos. What you need to know is the three counterparts to precious metals, these bars right here, are falling all at once, right? And typically when one of these falls, gold goes way up. But with all three of these falling at once, it's like the perfect storm. And for those of you that truly understand all of this, this is kind of a scary time. It's exciting but scary at the same time because a lot of people are going to lose a lot of money. So I just challenge you to take the emotion out, right? The people who are holding these, whether it's, a 10 ounce, a 1 ounce, a 1 gram, people who are holding precious metals are going to do very well, okay? There's going to be a turn of the tides. The stock market is going on a very long run. It's going to end. Smart money is getting ready to leave or starting to leave and put it into things like precious metals and cryptocurrency, which is fighting the fiat currency system that is collapsing. So hope you guys enjoyed this video. So get smart with your investing. Do your research. Make sure you subscribe, and I'll talk to you soon.